You're tuned in to Get It Right with Atara Solutions. This is a webinar series that seeks to demystify issues in employment and entrepreneurship. We do this every Tuesday from 8 p.m. So if you're joining us for the first time, make this your home. We cover all issues. We just finished a series on mental health. We covered quite a lot on mental health. May was Mental Health Month. Now we are back into business. I know last week I promised, for those of you who are joining us here, I promised last week that we'll be doing money today. So we are not doing your money, as I promised last week. We were supposed to do personal finance. I thought that we needed to discuss the finance bill because we all needed to understand before we can still make a lot of noise, just because the media tells us, and we have invited an expert on that. But before we welcome Mr. Edwin Makori, allow me to hand over to Kevin to recognize our partners who support us in bringing this program to you.
You can hear me?
Yes, Kevin, we can.
Good, perfect. Allow me to recognize our partners who help us to make sure that this Zoom meeting is reaching you from wherever you are. We have to recognize Stallion Company. Stallion Company, we have Pathway Solution Services, and the Pathway Solution Services is a HR and is a consulting firm, and they measure in competency-based productivity in as far as result of an organization and individual is concerned. If you want to reach out to them, you can. We'll share their website so that it can allow you to navigate through and understand what you are looking for. We have HRMPEB. HRMPEB is a HR firm within Kenya. If you are a HR and you've not done a certified HR course, please make sure that you've registered with HRMPEB. We have Panessa Training Institute. If you are this individual who love to work with their hands, Panessa is the place to you. They do wood carving and everything as far as carpentry is concerned. That is wood work. We have WeClean Services. WeClean Services is a cleaning company based in Nairobi. They help you clean anything and everything within your homes, within your offices. They have a machine that can clean your carpet within 6 minutes. That's just the peak of it. So if you're looking for a company to help you sort out your dirty carpets, your dirty clothing, or even office furniture, please reach out to WeClean Services. We have Suluhu Mediation Center. Suluhu Mediation Center, thank me to them. They've helped Grace at least to be a mediator. And if you are looking for mediation services, you can reach out to her as well. That is besides being the moderator of choice. We have Profiles International. Profile International. Hello, I think Grace, can you hear me from your end?
Yes, Kevin, I can hear you. You're on Profiles International.
All right. We have also Kapula Mintito. If you love Mabuyu or Mapochopocho from the coastal region, you can also get in touch with us. We'll help you get your Mapochopocho in time. We have El Samea. El Samea is a hotel within, is it Naivasha, Grace? Yes, El Samea is a hotel within Naivasha. Steadfast quality solutions. It's because of these partners of ours that we are able to reach out to you and make sure that you get it right with your business. We also have road trip edition. That is for those of us who love safaris and in the process they'd wish to learn. On the 8th of on the 8th we have this. I don't even have words to express about it because it's going to be an amazing road trip. That is 8th of July from 2:30. If you don't have a car and you need carpool, yes, we have something for you at only 1,000 if you're going and returning on the same day. But if you're going to spend a night, we also have something covered for you. For those of us who want a single bed and breakfast, is going to be 4,500, and double that is shared, it's going to be 7,500. The event is going to only come at a small fee of 4,000. The venue, you may ask, is going to be No Crass Reverend. It's in Sagana. Please make sure that you don't miss out on this event. On today's topic, as we are going to discuss about money. Money is what actually will take us to Sagana. So I pray and believe that Edwin Makori is going to answer some of the questions that is going to help us make sure that this event, among others, as a business owner and a business person, make sure that you meet your target. Edwin Makori doesn't need any introduction, but I'll allow him to just say something before we can start.
Kevin, before we allow, I think we allow Edwin to speak, introduce himself as we go. But yes, thank you for raising the Sagana trip. On 8th of July, we are headed to Sagana Nokras, and we are going to have an excellent time. I hope you're registering and you're ready to join us. We have good speakers. We have Simon Bevy. If you know Transform Nations, you can also Google them. Or the guy who wrote the book, Daddy Destiny. He has a lot of programs that deal with men, and he understands the gender as well. So he will be discussing the gender factor in relationships and at work, because our theme is collaboration. So the gender factor is real. We normally hear people say, I can work better with women, I can work better with men, or I am a sister's keeper, I do not care about men, and all these things. So where does the gender factor come in? That is one of the conversations we're going to have. We, of course, have a Newton Ciele. If you guys joined us for the discussion on risk, he was our speaker. He's the CEO of therapeutics pharmaceuticals or something like that, and he will be there in the panel with Dorothy Chepkoech, and of course Oscar Olima, who is also a county secretary in Makori. And then we of course will have Madam Kuresha, who will be there to deliver a keynote address. So Sagana is going to be lit. So I hope that you are getting ready, and if you're not coming for the fun of it, come for the learning of it. But please make sure you're combining both. We shall be in Sagana on 8th of July. And of course, we have Mr. Roy Sasaka, who is the CEO of the National Government Action Fund. He will be there to deliver a keynote as well. This is going to be something that oh my God, you guys, you cannot miss out. So yeah, make sure you register. I'm sure Jacinta has shared the link to register on the chat. Please make sure that you join us. Now, we can go on to the business of the day, the Finance Act. You know, Mr. Edwin Makori, people have been asking and making a lot of noise. And I thought to myself, instead of waiting, because sometimes we really cannot read this whole thing, what are some of the areas that we need to know about? What are some of the areas that we need to be concerned about? And before we can say that we do not like it because there's a 3% housing levy, we seek to understand some salient areas that you are able to cover within the next 45 minutes or so. And then we can now start making informed decisions. So we welcome you, Mr. Edwin Makori. Mr. Edwin Makori, he's CPA, Edwin FCPA, Edwin Makori is the former CEO at ISPAC. ISPAC already gave their input on the finance bill. And somebody was telling me that it was passed last week, and I highly doubt that it was passed. So I will allow Mr. Makori to sit in his seat and make sure that he's driving this conversation as best as he knows how. So welcome very much, Mr. Makori. You can tell us what you're doing now and how we can reach you at the end. But please tell us the Finance Bill 2023. Thank you. Karibu sana.
Sorry, I was muted. Thank you, Grace, Kevin, and Atara Solutions, and all the sponsors to this event. I think it's a pleasure to be able to meet quite a large number like this on a virtual engagement, and just being able to discuss on issues of taxation, and more precisely being able to unpack the finance bill for 2023. I think what has been discussed most and in the public out there is in relation to the housing fund. And if you ask anyone about the finance bill, they'll all talk about the housing fund and maybe on petrol, and not being able to get into the details of what is there in the finance bill. I don't know how to be able to introduce and progress this, but I should be able to do that. What we're going to do is just be able to get into of talking about the finance bill, why the taxes, highlights on the finance bill, and what should have been our responsibility to be able to handle that. As a way of introduction, I dwell in all these things with a passion in a company that now I should be able to provide the services that you need, both in executive coaching and mentorship, strategy and business advisory, governance and board practice, taxation, finance, investments advisory, and data and business analytics. We have our purpose, we have our mission, our vision, and what our values are as we deliver our services. Personally, I'm trained, I'm a graduate of finance and accounting, a certified public accountant. I've practiced, I've led the Institute of Accountants where tax standards, regulation, and many other things are discussed on a day-to-day basis. And more of this is just an engagement that happens between the Institute and the various stakeholders, including Parliament, National Treasury, and other private players on matters that do to do with accountability, governance, and finance and accounting. So just to be able to get into this, and I just want to be able to get to the chat. And if you are on the chat, just let me know whether you like paying taxes. Let's engage on the chat and see who likes paying taxes.
We have a lot of I don't.
You hate it.
There's someone who says it's important. Those employed are taxed severely, severely.
No, we have no option, not at all. No, in Kenya, you have no choice. Eh?
Yes, it's punitive.
Well, good. We'll see why we have to pay taxes. And just briefly, before we get into our main, so what we're going to look at is just being able to look at thanks for the responses that we received. And I know people don't like paying taxes, but they're here and they'll be part and parcel of us. So as we look at the highlights in the finance bill, there are a number of areas that have been affected by the tax. By the finance bill. One of it is on income tax. The other one is on excise tax, VAT, and what we call miscellaneous fees that have been affected by the Finance Act and our TPA, which is basically the Tax Procedures Act, among other acts that have been affected with the provisions of the Finance Bill. So in a nutshell, and being able to do as a summary, all the laws, tax laws that have been affected by the Finance Bill and other laws. As you can see there, the Income Tax Act has been affected by the provisions that are provided in the Finance Bill, the Value Added Tax, the Tax Appeals Tribunal Act, the Excess Duty Act, the Tax Procedures Act, and what we call the Miscellaneous Fees and Levies Act of 2016. Other laws that are being affected by the Finance Bill is the Betting, Lotteries and Gaming Act, the Kenya Rose Board Act, the Kenya Revenue Authority Act, the Employment Act, the Unclaimed Financial Assets Act, the Statutory Instruments Act, and the Retirement Benefits Act. Allow me to just be able to highlight why the taxes. I know everyone said, majority say they don't want to pay taxes. But you can imagine, and this is a quote that came from Benjamin Franklin, who said, friends and neighbors will complain that taxes are indeed very heavy. And if those that were laid by the government were the only ones that we had to pay, we can actually easily discharge them. But we are taxed we have many other taxes that we pay. And we pay much more we pay grievously or pay higher taxes on them. And one of it is that you are taxed twice as much for idleness, 3 times as much for pride, and 4 times for folly. And I give just an example. When you go for holiday, you are taxed for the idleness of just sitting and watching and being at the beach. That's your idleness at that particular time. When you buy a luxurious vehicle, that is purely about pride, but you pay dearly for that, 3 times as much for that. Albert Hart said that taxation is the price which civilized communities have to pay for the opportunity of being or remaining civilized. So for us to be able to see the need to be able to pay taxes, because we have to be able to balance out. I know as much as we are complaining about the Finance Bill, we also must be able to balance out and see why do we have to pay these particular taxes. And it all boils down to what we call public goods that we all share and consume. There are things that are available for free at any point that can be used by everyone. And for those who have gone to an economics class, will tell you that they're classified into 2, and all these types, and all these types then are things that we as individuals cannot be able to finance or be able to enjoy on our own. That non-excludable items, which it's impossible to prevent, or goods, is impossible to prevent another person from using that particular good. Or non-rivalrous means that one person's use does not diminish another person's ability to be able to use that. And I'll give a good example of a road. Even if I use it many times, I don't think I'll be able to diminish any road that I'll be able to use. But then being able to, if it's left to us individuals to be able to construct that, you can imagine how many will be able to do that. When we enjoy streetlights, for example, I'm sure everyone enjoys it. It doesn't limit that this is only my only portion that I can actually be able to use on the streetlights. There are many other amenities or things that we as individuals cannot be able to meet, like when you have floods. If that happened in your house, you'll only deal with your compound and then be able to leave what is out there for somebody else to be able to deal with it. But who out there is who? Out there should be the government, out there should be a county government somewhere, or the national government being able to deal with this. So I won't dwell much into this on non-excludable and excludable products, goods, and services, rival and unrivaled goods and services. But it's only good to be able to know that we do this so that we can be able to get our public goods, which then have both a connotation, both our environment, our culture, the technology, our public health, and all that. Back to our topic for today, and I know, as I said, what has been publicized and what has been the discussion for a long time is on the housing levy. But let's see what else is there into our finance bill. And as the minister will be reading this on Thursday, Thanks. We're just reached at a point where we're highlighting on the taxes, just a highlight on the bill. Just by way of notifying the participants, we might not cover everything that is in the finance bill 2023, owing to the time that we have between now and 9, but we just be able to give a highlight of what is it that you need to be able to take note of from the finance bill. There are a number of amendments that relates to a number of acts that are not per se relating to numbers of being able to directly affect you, but what is called just a cleanup of provisions that were there in the act. Some that relate to VAT and reclassification of items in the VAT Act. Something that as those that have been able to exclude from here, to be able to fit in within the time that has been allocated. But otherwise, the finance bill can be a discussion that can take half a day to be able to just go through what are the issues on that finance bill. Quickly, the first one that, as you all aware, is and this has been alluded to, I think, in a number of media and has been a discussion for a while, is on the tax rates for pay as you earn. Anyone who's going to earn now in excess of 500,000 and above will have to pay, if the bill goes through, a tax of 35%. I think this one of the things that needs to be watched out also by practitioners who include both lawyers, engineers, doctors, and all other professionals who, by virtue of their law, requires them either to have a sole proprietorship or a partnership. And therefore, what it means that your net income at the end of the year should be taxable at the graduated rates of tax, which is the PAYE rates. And therefore, it means that any income that are going to earn in excess of 500,000 shillings attracts a tax of 35%. The other provision in this is a provision to be able to amend Section 26 that relates to the term person, that now includes your spouses, ancestors, uncles, aunties, step parents, nieces, and nephews, which by way of being able to explain this is that now your tax liability can actually be assessed, or an obligation that can be extended to both your spouses, ancestors, uncles, aunties, and step parents, and that creates a wide way of being able to look at the tax liability if this goes through in the finance bill. The one that we've been talking about, and we've applied our minds, we've talked about it, we've been able to express our views, and many other issues have come up, is on the housing levy. that was amending Section 31 of the Employment Act to be able to include a housing development fund. With this is a requirement that the employer pays 3% of the basic, and the top up is done by the employer at 3%. The only good thing that law or the proposed law has is that, provided that the sum of both, the combined sum of both the employer and the employee will not exceed 5,000 shillings. I think since yesterday, we've had new developments on this. There's a proposal to be able to reduce this and also being able to defer this to January 2024 for discussions on how that will be regularized. We've meant to be able to get what the position is once it goes to Parliament, and that is debated, then we'll be able to know what that particular position is. I think what also it comes to mind is a post-retirement medical fund relief that becomes a positive move to be able to encourage people to save towards their post-retirement medical, and having that allowable on a maximum, up to a maximum of 60,000 shillings per month, or 15% of your contribution, but the maximum of it is 60,000. Whichever of the two is lower is what is going to be that allowable deduction that has to go through as a benefit to the employee. For those in the digital space, I know that's why maybe the Zoom went off, because this is not one of those interesting parts of being able to have a withholding tax of 15% on digital content monetization, which now includes offering payment for entertainment, social, literal, artistic, educational, or any material electronically through any medium or channel. And it's so wide, and therefore means that one needs to be able to familiarize themselves with this. For those who are in the digital space and others, there's a 15% withholding tax of 15% on the digital content monetization. This actually is a one way of why government is trying to be able to increase the tax net, and this affects many digital content creators, influencers, and many other who are earning or making their living out of digital space. But you're yet to see what we've not seen is the econometrics of this, to be able to understand what will be the impact of this out of the taxes that will be collected. The other one is the VAT on petroleum. VAT on petroleum was introduced in 2018 in the finance bill. It was initially at a rate of 16%. After deliberations in Parliament, then that came to 8%. In the finance bill this year, that now has been proposed to be at 16% with the exclusion of, for petroleum products, with the exclusion of liquid petroleum gas, which is basically the gas that people use in their homesteads. But then petrol, by extension, that means 16%, and that takes effect on a cent of the bill, and which should be effective from 1st of July 2023. And then that means that we have now to pay higher fuel prices for our petroleum. The effect of this is not just on petroleum, but is on all other products, including transport, including your food products, including your inputs, whether it's pharmaceutical, whether it's agricultural. Everything will have to be affected by this, because cost of the cost of fuel as an effect on all sectors. For gas, what they've done is just to be able to exempt gas from VAT. This was introduced sometime in year 2020, but the implementation then was suspended in 2021 due to the high cost of living. What you're seeing in 2022, that was reintroduced at 8%. But now that has been removed and is a relief to consumers. But what you are also watching out on this is that any input on VAT incurred by suppliers is it's just become an exempt item. So what it means that any VAT that input VAT for materials that are going to be able to go into gas, then as incurred by the suppliers of gas, will become a cost to them. And the obvious thing that the suppliers will have to do is to be able to pass the same cost to the consumers. So it is one of those areas that may have a zero effect in being able to have the VAT removed, and that costs that should be that is not claimable by the suppliers being passed on to the consumers. I think this is one of also one of I've seen in the social media people discussing. It's not been that open on the in the public space, but is on insurance refunds. And what the law says that now those will be subject to VAT when you have an insurance refund for a compensation that you're going to be received, and that VAT should be at 16%. From that amendment to that particular law is more or less talking about suppliers that had already been deducted input tax. But in essence, what it means, therefore, is that as you restore yourself to where you were before a calamity struck, you are also going to pay a tax on that insurance refund. And it's more specific in those provisions where that compensation includes loss of VAT, where input VAT had already been claimed. You have to be able to declare it and also remit to the taxman. A relief to many of us is on inflation, on adjustment that used to occur on excise duty. And therefore, this meant that it was very unreliable and unpredictable on how to be able to know what taxes will be there or what prices will be there in the subsequent year, which was actually powers that were given to the Commissioner General to be able to adjust specific rates of excise duty once a year to be able to take into consideration inflation. But as you know, the effect of this is that, and we all know, and being human resource practitioners, salaries do not adjust as much, and being able to take into consideration the considerable inflation adjustment. The adjustments might just be minimal, but not the full impact of inflation. And therefore, what that meant is that for most of the products that we would buy, the excise duty will be adjusted to deal with the annual inflation adjustment, which the bill now proposes that that is removed. Is both a good thing to our taxpayers and businesses, that it brings now certainty in how in our taxes and how we plan for it, in the sense that it will not be something that will, once the commissioner increases, then it throws us off in terms of cash flow management, in terms of being able to plan for your items at home, and it's a welcome move. Besides that, there is another amendment that has been made on the fees on digital lending for those who are going to or have the platforms for digital lending, there's an excise duty that now has to be charged of 20 at the rate of 20%. What simply means is that if you're taking 1,000 shillings, for example, and the lender takes in a commission of maybe 100 or charges you administrative fee of 100, then they have to pay an excess duty of 20 shillings onto that. So it becomes, and you know that's passed to you, so it becomes 120 shillings plus the amount that, or minus the amount that you're going to receive, either depending on how the digital lender is doing that. And maybe you might be able to get 880, but pay back 100 shillings, but 20% of that goes off to the as taxes. In terms of clubs and associations, there is a provision now. There actually, the Income Tax Act and the proposals that are in the finance bill tends to be able to repeal Section 21 of the Income Tax Act and brings in a new provision whereby members, clubs, and trade associations' incomes will now be under the armpit of tax, where it says that if all incomes that are going to be carried out by that business and the gross receipts on revenue, which include entrance fees and subscription fees, shall be deemed to be income from the business. And I think this is a move to be able to have clubs and trade associations be able to get into the tax net and be able to start paying taxes. What is there currently is that for as long as 75% or more of your income is from members in terms of subscriptions and fees, you are then not subject to tax or will not be taxed. But with the repeal and reintroduction of this, that now member clubs and trade association, all incomes, and which includes entrance fees and subscription, shall be deemed to be income, then those now will be subjected to taxation. Another area is on matatus and trucks, which have now have to be able to pay some tax. What is interesting is how to be able to see this, how that would be able to pass to the consumers, because remember, is a hire of 100 shillings per passenger per month, or 5,000 shillings per year. And for cargo vehicles is 3,000 shillings per ton per year, or 5,000 shillings per year. You can do the maths and see where the numbers are and how that will be able to translate, even as you look at what that will impact into the transport sector. If we look at that in terms of the current rates, and if they're going to pass this to the consumers of, for this case, who are passengers who are going to use the passenger vehicles. Initially, it was 60 shillings per person per month, or 2,400 per year for passenger vehicles, and cargo vehicles being the hire of 1,500 shillings per ton, or 2,400 per year. I think the other good relief is on club and entrance or subscription fee paid by an employer, which are now becoming a deductible expense, and companies will be able to benefit on these ones on the income of the employer. But the part that is there is that then that particular subscription and club entrance is also taxable on the employee. When we have reimbursement of mileage and taxes for employees who are going to be able to carry out or perform official duties, then that is going to be considered as a tax-free treatment for the organization, also for the employees, but it would have to be based on the AA rates, or Automobile Association of Kenya, AA Kenya rates. The taxation of benefits and an employee share option plan now has been amended for those who get shares at the end of the year, in being able to, at the end of the year, once the financials or at any given time within the year where the company decides, rather than giving you money, that is converted into shares, so that you have a share option. The plan now is going to be based on the market value on the date at which, when the option is exercised, or if there's no market value at that particular time, then it goes back to the last audited financial statements. The other one is on turnover tax for businesses. Initially, the turnover tax was at 1 million at the lowest point, and 50 million, and not exceeding 50 million, then you'll be able to pay a turnover tax of 1%. What has happened now is that the bill has proposed that reduces to 0.5 or 500,000 shillings, but not exceeding 15 million. And now the turnover tax has increased from 1% to 3%. This was just to be able to encourage SMEs to be able to grow. And what that means that now, even if you're earning 500,000 shillings, then it means you get into a tax bracket where you have to be able to pay 3% of 500,000, which is 15,000 shillings, as one of final tax that you need to be able to pay to the government. And we need to be able to see how the efficiency and effectiveness of being able to collect this. But then that's the provision that we have in Finance Bill for 2023. I think the other one is the introduction of being able to ensure that and empowers the Commissioner General to be able to have that all expenses that are going to qualify for tax deductions must be restricted only to those expenses that must have been generated from an electronic tax invoice management system. And therefore, what that means is that for you to be able to have or deduct that component of your invoice from as an expense for your business, then it must have been generated by a tax invoice management system. In terms of residents this just relates to sales promotions, marketing, and advertising services. There's going to be a withholding tax of 5%, which will have to be deducted for sales promotions, marketing, and advertising services. Persons who are going to receive rental income on behalf of owners of premises shall be able to deduct the tax therefrom, which has been reduced from a withholding tax of from 10% to 7.5%. But what also the law requires is that they need to be able to remit that tax within 24 hours after the deduction. The Act also has been able to clean up on what we call related persons, and this just relates to companies in case of two persons where a person participates directly. A related person to mean just in case of two persons where a person either participates directly or indirectly in the management, control, or capital of the business of another person. Other amendments to the Act that will be to those who are providing manufacture of human vaccines is just being able to replace were initially income tax exempt. now a corporation tax of 10% has been introduced, and a withholding tax exemption that is applicable to royalties paid to non-residents and interest paid to a resident and non-resident persons. To be able to encourage the blue ocean economy, there is also an industrial capital allowance that has been given of 10% to be able to encourage those to build, to have transport systems for in water, bridges, tunnels, inland navigation, water and electricity, and hydroelectric power. There's going to be a 10% capital allowance, and this is just geared towards the blue ocean economy. The other amendments to the Income Tax Act is what we have currently as an amendment for those who are going to have tax issues with the KRA, and at any particular time, then that is determined, and you have to be able to appeal for that. For you to be able to get to the next stage of an appeal to the High Court after a decision, because you're first assessed by KRA. If you dispute that, you take that to the Tax Appeals Tribunal. Tax Appeals Tribunal makes a decision, and you can appeal that decision in High Court. For you to be able to appeal the decision in High Court, then you'll have first to pay 20% of the disputed amount before you can actually file that particular appeal. For this particular provision, I know it is in contravention, and the courts that pronounce themselves on this to Article 48 of the Constitution on access to administration of justice, and Article 50, and we will get to see how that Parliament is going to navigate through to Article 48 and Article 50 of our Constitution. And then the other thing that is introduced in the finance bill is to do with trustees who are resident in Kenya. Now they have to maintain and avail tax records for their trusts that are registered in Kenya or outside Kenya, whether the trust income is generated in Kenya or not. And for this, has a far-reaching implication, because for even churches that are set up under trusts, now they'll have to be able to avail their information and records to the taxman to be able to see. I think what are the other power that is, or provisions that are in the finance bill, is on the Commissioner General to be able to establish an electronic tax system for issuing tax invoices, and so just be able to ensure that businesses are able to have a system in which they use, which is electronic, to be able to keep their records, and that's now enshrined in law. And what basically this means is that we are slowly moving to a real-time environment of being able to monitor invoices and payments, and KRA being able to see whether they can be able to have a real-time basis of being able to collect taxes. I want to be able to just give a highlight on what is affecting a number of items in terms of the excise tax. On telephone and internet data services, there's a reprieve where the excise tax has been reduced from 20% to 15%. But now on money transfers, mobile money transfers, and other financial services, where there was no excise tax, there is now a 15% excise tax. And for cellular money that was on cellular phones, where we use the mobile money to transfer, which was 2%, that has gone now to 15%. You can imagine the effect of that when you're transacting on M-Pesa. Betting, gaming, and prize competitions and lotteries all those had their excise duty increased from 7.5% to 20%. If you're going to erect a billboard, do an advert in the television, print media, and radio station on alcoholic beverages, betting, gaming, lottering, and prize competitions, now that will have to attract an excise tax of 15%. Sugar confectionery, and that has now a new excise tax at a tax of 242.29 shillings per kg. And this is basically that sugar that is used to be able to bake and used for industrial purposes. That has now an excise duty of 242 shillings. Imported fish has an excise tax of 100,000 shillings per metric ton, or 20%, whichever is higher. Locally produced pasta has now a new excise tax of 20%. Porridge juice has an excise tax of 25 shillings per kg. Sugar that excludes imported or locally purchased by registered pharmaceutical manufacturers, being 5 shillings per kg. I know you've had this discussion about human hair and other products. There's an excise tax of 5%. Wigs, beards, eyebrows, and eyelashes, switches, and the like, and other products of heading also have now a tax or with excise tax of 5%. For the ladies, artificial nails have now an excise tax of 5%. Imported furniture, which excludes furniture originating from the East African community, will have an excise tax of 30%. Imported cement has either a 0% of value or 1 shillings and 50 cents per kg, whichever is higher. Imported paints, varnishes, and lacquers will have an excise tax of 15%. So, ladies and gentlemen, that is just in a nutshell of the main effects that we will have on once the Finance Bill 2023 is passed. There are many other provisions that we've not brought to the attention just because of time. But remember that it is our responsibility to be able to know what taxes we need to be able to pay, and how do they affect you. Engage the legislative process as much as possible to be able to highlight their concerns, so that when those taxes come into effect, you don't complain after. You are always given an opportunity to be able to express yourselves. Know when those taxes are going to be due. Some of these taxes are due as, if we go by what the provisions are, in 24 hours, I think that is going to be an onerous task for most of those taxes. You need to be able to ensure that you elect the right people who will deliver the services for you. And if you at all you don't participate, don't complain about the taxes. And with that, I need to just be able to end with this quote. In this world, nothing can be said to be certain except for death and taxes. Thank you very much.
Makori, that's not fair. At the death and taxes.
Yes.
You have just finished that, oh, you have finished that.
Never avoid those.
Well, right. Thank you so much, Makori, for that elaborative session. There's actually one person here, I think they need a clarification on the housing levy. That is a proposal of housing levy treated the same way as contribution to home ownership saving plan. I don't know if you got the question.
I think not really. This is going to be a different deduction that is going to happen from salaries. And remember that is going to cut across whether in private sector or public sector. The 3% is a new deduction that is going to happen, and is 3% of your basic to a maximum of 2,500 for the employee and 2,500 for the employer.
So let me ask you, Makori, in your opinion, do you think
Yes.
this bill is good for our economy? Like, I mean, all those taxes that are new, I'm like, for somebody earning 30,000 or for a business that has just started, where do we stand? What do you think?
I can understand the dilemma in which the government is in to be able to raise taxes. And the biggest challenge that we have, even before I respond to your question, is that we have eligible taxpayers who are 21 million. 7 million of them are unemployed. So it narrows down to around 14 million eligible taxpayers. But those who actually pay taxes are 6 million. And when you look at those 6 million, that includes companies, which are around maybe give or take around that 600,000. So we're talking about 5.4 million people who pay taxes. So there's a huge 10 million people who do not provide or contribute to this particular kitty. So the 5.4 are supporting an economy of 47 million people. And this is why you're saying the tax is being loaded on maybe the same people over and over again. I think the other knowledge that has come through, even as we look at the informal sector, which has almost employed 11 million Kenyans, we're told that 2.7 of those are the ones that are actually active, making I mean, in very active businesses. And with those 2.9% out of the 2.7 are the ones that make over 100,000 shillings. So you can imagine the dilemma that now the taxman has to be able to get into to be able to raise taxes. But as we look at developed worlds, one of those that has made, they actually make more of their taxes from what we call fines and levies, and from what we call consumption tax, VAT, and excise duty. Income tax is actually, it comes in at the very end in terms of the taxes that are being collected. With our country, then we need to be able to ask ourselves, how do we expand the tax net to include that everyone at least has a contribution to our taxes? And therefore, we might be able to feel that these taxes are onerous, as giving those dynamics so that you can actually be able to see the balancing act that the government has to be able to put, especially the National Treasury has to be able to put in place to be able to have a collection of taxes. I can see a question that that yes, we also need to prove to ourselves. I think we have a target, and the president has said, to be able to raise not at least 211 billion for our partners on a monthly basis, for our partners to be able to see that now we actually merit to be able to be given money to be able to support us on all our activities in terms of debt. So yes, we might be be in an onerous tax regime, but then the options that we have is what we need to be able to look at. And one of those options is, how do we increase the tax bracket? sorry, the tax net, the tax base, sorry, the amount of the number of people who are going to pay taxes. If that increases, then it relieves everyone else, because the same people are being taxed. And that is why this time they've even gone to the digital space to be able to enhance the tax base.
Yes, Grace, you're on mute.
Yeah, I've seen a question on the Q&A. Somebody saying, I would like to know what happens to resident associations who have come together to contribute for security and cleaning services provided to them. Are these services exempted from tax in view of the fact that the amount contributed is through subscription?
So long as it's going to be considered, associations also have membership fee. And now that comes into the tax bracket if the amendment goes through. Because remember, is social clubs and associations.
Yeah, so question, Mr. Makori, where are we now in terms of this bill? Where are we? Because I've seen a comment from Helen Musali who says she just discovered that Kenya Kwanza said that they would reduce 3% one.
No. I'm on blackout. Oh no. Oh no.
Yani, okay. So, as Kenyans, what is your call to us? What should we do? This thing is actually depressing.
It shouldn't be depressing, because there are two issues to this, and there are two angles to this. Remember, you also have to be able to appreciate that government is the biggest business in an economy. All of us get our tenders, not all of us, majority of us get our tenders from government. You can imagine if government stops spending, most businesses will also close. So we are in what we call a symbiotic relationship in ourselves and the government. And then if that does not happen within the economy, then it means we don't generate the relevant taxes that are then remitted back to government. So we are on a cycle that without one, the other will not be able to survive. So we just have to be able to accommodate each other. And I'm sure with time, most of this, I know the new regime is also grappling on how to be able to deal with a number of pledges and requests. But I'm foreseeing a situation where this will be reviewed subsequently, maybe in the second or third year, to be able to give a relief to Kenyans. But it's just being able to tighten our belts for now and embrace the changes that are coming.
So question, this thing has to be done by the time they're reading the budget?
Not really, but it has a timeline. By 30th of September, the finance bill must have been assented to. So but from what I hear and the discussions that are going on, that by end of this month, this will have to have been assented to. And therefore, by 1st July, most of this will have taken into.
Wow, okay. Now, there's another question here as we come to the end. Where is that question? Insurance tax, is this applicable to all personal insurance claims, like accident, retrenchment, loan, insurance, etc., or is it a business insurance tax?
From what I read, it is a business insurance for taxable supplies. My understanding right now, it's time to be corrected if there's any other interpretation, but it was for taxable supplies, as I've seen the bill. If it's going to read anything else, I stand to be corrected.
Okay. And then Mohammed is saying, how will this housing levy help people who live in remote areas like northern Kenya?
I think this is modernization, and we need to be able to agree that urbanization is coming and is fast approaching. We are in the 21st century. We can, with time, we need to be able to move, and urbanization will actually change us very fast. The only thing that we need to be able to see is the modalities on the structure, implementation, and accountability of the fund. But from other points, this might be a noble idea to be able to go into. And I know government is looking at how then do they be able to create sustainable funds to be able to finance once they get in a contractor, then they're sure to be able to do this, because from the projections done at 3%, that was to be able to collect 9 billion a month, which was going to be almost 108 billion in a year. And therefore, you can actually be able to effectively contract somebody and assign a contract, and they do the work. The challenge, and from where I see it, is how that modality is going to be done. But I think we also need to be able to accept that we need to modernize us. We need to urbanize ourselves, which is inevitable with time. I think as things move with the digital age and civilization as it's taking its toll, we'll get there with time.
I am telling you this one, as Kenyans, we are going to feel it, but I guess we should be able to see how the changes that are effected come into being. And I am assuming this is a very contentious issue that we will never finish today. So allow me to remind you that this webinar is brought to you by Atara Solutions in partnership with Profiles International and HRM-PEB. If you're here and you wish to do your CHRP, make sure you register with HRM-PEB. Currently, they are collecting views on the launch of the private candidate, but also for those of you who are doing the CHRP exams, we wish you the very best. But if you're here and you haven't started your CHRP or you're stuck somewhere, please get in touch with us and we'll link you up with HRM-PEB so that you can register for your CHRP exams. I want to just take this opportunity to I like the comments on the chat. Yani, these are things that we are really fighting, but I hope the change management is done and that at least the economy is also able to support. I cry for small businesses like ours because some of these things will definitely affect our income. And of course, for the people who are not able to sustain employees, speaking from my HR point, because then the amount of money that is required to sustain some of these things, then it becomes a bit difficult. Anyway, but I guess we shall find a way. So at this point in time, allow me to request you to join us for the Sagana retreat. We are heading to Sagana on the 8th of July. Make sure that you book your slot. You cannot be left behind. I mean, surely, people are taking a road trip and you're just staying here. You're going to learn, we're going to network, you're going to make friends, we're going to make meet business contacts. I mean, it's time we start you might meet your next employer because networking is your network. So make sure that you show up at Sagana in Okra. We have posters for more details. And of course, you can get in touch with us and we'll be able to link you directly. And of course, follow us on Instagram, like our Facebook page. I'm so sorry that people who follow us on Facebook weren't able to go live today. We were stuck in a meeting that took too long, but here we are. We at least had to continue with the conversation. But before we summarize the session, Mr. Edwin, give us your parting shots.
As I said, the only thing that is sure is death and taxes. We've just scratched the surface on this. I mean, as I said, is a topic that we can discuss. There are many other. I mean, once you understand what the proposals are in the finance bill, it opens up to other discussions that we had today, and maybe even after the finance bill is passed, we can still come back and see what has been passed, what is the effect of that, and even have a longer conversation on what is the ultimate impact of this on livelihood, on businesses, on organizations, and what we need to be able to take care of, because most of the time we only get to see prices increase, and then you're wondering, but why did this happen? Not knowing that you didn't even participate in the first case to be able to understand what taxes are going to affect you, how are they going to affect you, and then being able to plan effectively once you know how that is going to affect you. Because at the end of the day, for you to be able to survive, you must have money in your hands, what we call the disposable income, that helps you be able to buy items, move from one point to the other, and being able to make savings and all that. So, but at the center of it, taxes are always with us. So as you plan even your finances, anything that you do, taxes affect our way of life. It's only that people don't engage effectively on them, but they affect us every day in our lives. Whether you buy, when you go to buy to a shop, there's a tax that you pay, or a tax that has already been deducted on that particular item that you're going to buy, whether from a shop, from a supermarket, from a petrol station. You are going to encounter taxes anywhere. So, and that's why I said taxes are here with us, like death. Thank you.
I hear you. Paul Evelia, Jessica, there's somebody who's asking for the Sagana link. Please share on the chat. Paul Evelia, your hand is up. You wanted to say something? Paul Evelia?
Okay. So Grace, I'll say we can engage more on this. There are quite a number of things to be able to learn from this. I just did the surface of it. I've left my contacts there for those who want to reach out, to be able to reach
out. Yes, thank you very much. At least we can share your contact. Oh dear Lord, Frank is telling me we have today offers. Frank, I am not able to, unfortunately, I'm logged in with my phone and I'm logged in on YouTube as well. And Kevin is away. I don't know where you put it. I'm not able to project the offers. Let me see whether we are able to do that on the phone. So Frank is giving away offers to who? Pathway Services Free LMS e-learning, budget and financial reports, crisis management, managing finances, lean process and Six Sigma, and leadership and influence. These are for 3 individuals, which is free, fully sponsored by Pathway Solutions. 2 trainings of choice from the above list, and that list is budget and financial reports, managing finances, lean process Sigma, leadership and influence, and crisis management. And if companies wish to be taught on this, you can also write to us. Frank, I'm gonna task you to put the whatever on the screen. I am not in my comfort zone today, but we are making it work. You can share your contact details so that people can apply for the free offers. You can write to myself and Frank and request for the offers, and we're going to offer them to you. So thank you very much, guys. Mr. Makori, we appreciate you. Thank you so much for being with us. Catherine Sidandi, as always, thank you so much for being with us. And to you, our audience, we appreciate you. Thank you very much for choosing to be here. And of course, you can reach out to Mr. Makori for further enlightenment. For those of you who run associations for businesses and you're here, you can invite Mr. Makori to unpack this for you. And of course, if you're looking for a tax consultant, he's there. He can walk the journey with you, and he's able to support you on your personal journey in terms of coaching. So make sure that you give a shout to Mr. Makori as well. And we will also be in a position to share his contacts with you for further engagement. And of course, thank you very much, our partners. Frank, I am so sorry I'm not able to project the offers, but Frank has shared his email there. If you wish to take advantage of the free trainings on the LMS, LMS is the Learning Management System, where you train yourself, you take an exam, and you'll be able to get a certificate. And I've read out the offers that are available today. So you can be able to take advantage of that. Make sure that you just send an email and you'll be able to get that offer from Pathway Solutions. So thank you very much for joining us this evening. I hope you're more enlightened now, and I hope for those of professionals who are here, you can be able to have better conversations in your boardrooms because now you understand where the country is moving to. And of course, always get it right with the Sarah Solutions, where we make sure that we demystify issues that affect employers and employees. And we are here every Tuesday from 8 p.m. to 9 p.m. So make sure that you join us. And of course, we will be happy to engage further and take feedback from you on what else you want us to discuss as well. So thank you very much. And we wish to call it a night. It's now 9:30, 30 minutes past our time. But where today technology? Actually, Kevin's technology also failed. He literally was thrown out. He has a blackout. And then, today is one of those days. But we are here, and I hope that the session was impactful. I've enjoyed the session, Mr. Makori. Thank you so much for agreeing to be with us tonight. And I hope that going forward, we can engage on other projects. So thank you very much, guys, and have yourselves a lovely, lovely night. Unfortunately, for those of you who stay for music, we are not able to do that tonight. Hey, Leo, I tell you. But we are agile. We are agile. We focus and we work with whatever we have. So thank you very much, guys. I'll see you next week, same time, same place, as we figure out our personal finances now. Because we have to tighten our belts at this rate. So thank you so much, guys, and have yourselves a good night. See you next Tuesday from 8 p.m. And thank you very much for being. Yeah, DJ is fired. No. It is the internet that has fired him, and I'm logged in with my phone, so I'm not even able to play music. But we shall make sure we practice these things next time. We shall not just say that we are not able to play music again. We shall make sure that we are able to. So thank you, guys, and have yourselves a good night.